Darius, good to see you. I have $1 million question. Everyone wants to know, are annuities a good investment? Sales of annuities reached record highs in the second quarter of 2022 when stocks were struggling. Actually, they hit 77.5 billion. That's the highest quarterly sales ever recorded. So there are many different kinds of annuities. They generally serve one of two functions: as an investment or as a quasi-pension plan offering income for life in retirement. And of course, creating stable income in retirement is very important. So I want to start with fixed rate annuities, Darius. What are these?
The fixed annuities are basically CDs, but issued by insurance companies. That means there's a fixed guaranteed interest rate for the time of the contract. Usually it's 3, 5, 7 years. And there are the interest rates, the guaranteed interest rates are usually a little bit higher than CD rates at the banks, and they have longer guarantees. That means you can lock in those rates for a longer period of time. And the biggest difference between fixed annuities and CDs is that fixed annuities are tax deferred and CDs are taxable.
Interesting. Okay, so as we talk through the other kinds of annuities, I want to bring up this visual, which shows the risk of the scale of risk by annuity type. And we can see fixed annuities there at the left hand. So let's now move to the middle. What are indexed annuities?
Well, fixed and indexed are pretty similar, and that's why they're the reason they're very popular in currently and recently, because the interest rate environment changed dramatically. We have the highest interest rates since last 22 years. Okay, interest rates went up by 200-300% over the last 2-3 years, and that's why fixed annuities have over 5% guaranteed rates right now, which they didn't have a couple years ago. And index annuities are basically fixed annuities, but they're not tied to the fixed interest, but to the growth of underlying index. Could be any index that certain annuity company provides, and there's a lot of them, and there's a lot of good ones up there. So basically, you're participating in the growth of the index, but not participating in the risk of the index. So you can't lose any money, but you can make money if the index goes up. Mm-hmm. So the average rate of return is expected to be higher than a fixed annuity rate.
Interesting.
And also index annuities have additional riders and benefits like long-term care riders, right, guaranteed income riders, which are very, very crucial and important in retirement.
Absolutely. Well said. And then as we talk through the risk of scale here, scale of risk, at the end we have variable annuities. This is one reason why annuities have a bad rap.
Yes. Our company that doesn't provide those products. They usually have a bad rap because usually they have pretty high fees, and they're very, could be risky. They are tied to the markets, and obviously they can add some guarantees to your contract for the fee. That's why those fees are very high, but it's more risk because you actually get all the risk of the market, and it could be a fit for some, but our company doesn't provide that.
Mm-hmm. So would you recommend that risk-averse investors allocate a portion of their bond portfolio to annuities?
Yes, we've been doing this for years, because bonds for years they have very low interest rates. And they had the interest rate risk. That means if the rates go up like they did last mm-hmm. year, the values of bonds go down, and they did go down. That was the biggest drop in the values of bonds in 40 years. Okay, so we were searching for alternatives years ago for bonds, and fixed index annuities are a very good alternative to a bond portfolio, because they do not have the interest rate risk, they don't have the market risk, and they provide a better rate of return than most of the bonds.
Interesting. Well, I'm glad we got to talk this through because there have been so many changes that have happened so quickly in the stock market and the bond market. Darius, if somebody wants to talk to you more about how annuities can find a place in their portfolio, what's the best way to reach you?
Yeah, just give us a call to our office, 847-312-3454. We can schedule in-person meeting. We are located in Northbrook, Illinois, or we can schedule a Zoom meeting. We have clients all over the country, so that's not a problem. Just give us a call.
All right, Darius, thank you.
Thank you.